What's up? This is Ryan with Planet Cheapskate, and this video is all about the home loan underwriting process. We break down everything you need to know that will contribute to maximizing your home loan approval chances. We're going to be covering what a mortgage underwriter's job is, what underwriting a mortgage actually is, what documents an underwriter may need from you when underwriting your home loan, and what categories or factors the underwriter looks at when working through your loan. Now be sure to also stick around to the very end of this video for 3 valuable loan hacks that will give you insider tips on how to get through the underwriting process as quickly as possible. But first, I'd just like to take a very brief moment to personally invite you to subscribe and join our community. I do a home loan rate update every Friday going into the weekend, along with a new video every Thursday helping you manage through the world of credit, investing, real estate, and home loans. Also, when you do subscribe, be sure to hit that little bell and it will alert you whenever I release fresh content. Now, with all that out of the way, let's dive right in. A mortgage underwriter is a professional who evaluates loan applications and determines whether they meet standards set by the lender. The underwriter's primary responsibility is to assess the borrower's financial background and creditworthiness to determine their ability to repay the loan. They are tasked with minimizing the lender's risk by ensuring that the loan is a sound investment. Mortgage underwriters work for banks, mortgage companies, or other financial institutions that lend money for the purchase of real estate. They are responsible for reviewing loan applications and supporting documentation to ensure that they meet the lender's requirements. They review credit reports, income documentation, bank statements, and other financial information to assess the borrower's financial status. The mortgage underwriter also assesses the property that the borrower intends to purchase to ensure that it meets the lender standards. This includes a thorough review of the property appraisal report to ensure that the property's value is consistent with the amount being borrowed. They also verify that the property meets any special requirements such as flood insurance or any other requirements that the lender may have. Once the underwriter has reviewed all the necessary documentation, they make a final decision on whether to approve or deny the financing of the loan. If the application and the loan is approved, they will verify and approve the interest rate, the terms of the loan, which may include the length of the loan and the amount of the down payment. In summary, the mortgage underwriter is responsible for ensuring that the lender's money is being invested in a sound and profitable way while minimizing the risk of default from the borrower. So as far as the definition of what mortgage underwriting actually is, it is the process of evaluating a borrower's financial and creditworthiness as well as the property being purchased to determine whether the loan is a profitable investment for the lender. An underwriter's job is to minimize the lender's risk by ensuring that the borrower has the ability to repay the loan and that the property meets the lender's standards. The underwriter reviews a variety of documentation including income, employment documentation and verification, credit reports, and property appraisals to make a decision on whether to approve or deny the loan application. The underwriting process is critical to the mortgage lending industry. It ensures that the loans are made to qualified borrowers and that the lender's investment are sound. So after you apply for a mortgage and are pre-approved, at some point during the process, you'll need to provide various documents to the underwriter to help them assess your financial situation and determine your eligibility for the loan. These documents are broken down into 6 categories: income, assets, employment, credit/debt, identification, and property. I'll dive a little deeper into each and provide examples of what may be needed. Now understand this isn't an absolute list. There may be one-off or additional items needed from the underwriter in your particular case. So the first are income docs. This can include your most recent pay stubs, W-2 forms, and tax returns. So second, we have asset documentation. And for this, you may need to provide bank statements, investment account statements, and other documentation that shows your available assets. Next, the underwriter will need to verify your employment. So they may need to verify with your HR department or supervisor regarding your employment status and history. This means you may need to provide contact information for your employer. After that, you'll have your credit or debt information. And for this, you'll need to provide information on any outstanding debts, such as credit card balances, car loans, or student loans. Now, this is usually knocked out with the credit pull, so you shouldn't need to worry too much about this unless there's a reoccurring item that doesn't appear on your credit report, such as a tax payment plan. You'll need to let your loan officer know about these, as they'll be discovered later during the process, and it's best to be prepared. You'll also need to provide your identification and other personal details. You'll need to provide government-issued ID, maybe your social security card, and proof of residency. Finally, you'll need to provide a few property-based documents, but this is usually taken care of for you by your real estate agent, settlement title agent, and your loan processor. These items include the purchase contract, title history on the property you are purchasing, homeowner's insurance information, and last but not least, property tax info. It's important to note that the specific documents you'll need to provide can vary depending on the lender and the type of loan you're applying for. Your lender will provide you with a much more detailed list of required documents. So be sure to read it carefully and provide all requested documentation in a timely manner to help expedite the underwriting process. So the particular categories and factors the underwriter looks at when making the determination on your file mostly goes hand in hand with the documents you provided. So here are the main categories and factors a mortgage underwriter looks at for a borrower. First, the underwriter is going to verify your income and your employment through documents such as your pay stubs, tax returns, W-2s. This helps the underwriter determine whether you have the capable, stable income that can afford to repay the loan. Second, the underwriter will review your credit report and credit score to evaluate your creditworthiness. A high credit score is a good sign, and good credit history indicates that you are responsible with credit and that you can be trusted to repay the loan. Thirdly, the underwriter calculates what's called the debt-to-income ratio, and they do this by dividing your monthly debt payments that are reoccurring by your monthly income that's reoccurring. This helps the underwriter assess your ability to manage additional debt payments that come from the house payment. Next, the underwriter will evaluate your assets, such as savings, investments, and reserves, which are funds set aside to cover mortgage payments in case of financial difficulties. These factors help the underwriter assess a borrower's financial stability. This next one is a big one. The underwriter will review the property appraisal report to determine the property's value and ensure that it meets the lender's standards. They will also check out the title history of the property and make sure that the office that will do the closing has proper documentation and credentials. Finally, the underwriter calculates the loan-to-value ratio by dividing the loan amount of the property by the property value that came back on the appraisal. A lower LTV indicates that you have more equity in the property, which can reduce the lender's risk. So, as promised, 3 amazing loan hacks that will get you through the underwriting process at the speed of light. The first loan hack would be to go through your bank statements for any deposits that are over 1% of your loan amount. Once you've found these transactions, write down the date and a little description of the details. Unexplained deposits are one of the biggest issues that can slow down your approval process. The second loan hack would be to make sure your processor is requesting an early CD as soon as possible, as soon as you can get all those invoices in. Usually the one holding it up is the appraisal invoice. You may need to remind them multiple times. The CD oftentimes can hold up your closing by 3 days. See, there's a requirement that once your CD is issued and reviewed by you, you have to wait 3 days before you can close. So getting an early CD out of the way can quicken your closing by up to 3 days. So finally, the third loan hack to get you through the underwriting process at the speed of light would be to do some research on the lender that you are using. There are lenders in our industry that have a reputation for fast or even slow processes. Avoid the slow lenders, and you should be on the right path. So there you have it. Everything you need to know about what a mortgage underwriter's job is, what underwriting a mortgage actually is, what documents an underwriter may need from you when underwriting your home loan, and what categories or factors the underwriter looks at when working through your loan. Please leave a comment below if I missed anything or if you have any questions. I'd love to hear from you. And listen, if you gained value or knowledge from this video, do me a huge favor and smash that like button so more people just like you can see this info. And if you liked this video, I'd like to invite you to watch one of my other videos. Over here, I break down and hack every major home loan. And over here, YouTube has determined that you may enjoy this video. Thank you for tuning in. Until next time, best of luck.